What's going on, YouTube? Today we have a very important discussion. We're going to be talking about the auto loan crisis, how it's affecting banks, and what are they doing about it. Now, today I have two special guests. First to my left, we have...
Alex Wilhelm, the CEO and founder of Loanbridge.
And to my right?
Bahador Rahimi, co-founder and EVP at Autosquared.AI.
Nice. So today we want to talk about currently what's going on in the automotive industry. There's a lot of panic with banks. I've seen them kind of overloan with repos. And so first, I'd like to get your guys' opinion on the current market. So first, I'll turn to Alex. What do you think of the current state of the actual auto loan market?
I mean, current state in general is we see an increase in overall load, which means it puts a lot of burden on to the loan servicing department specifically. I don't know, it's what do you feel, Bahador? What do you see on your corner of the internet?
No, absolutely. I mean, looking at the loss mitigation aspect of the auto finance space, delinquencies obviously is all-time high, number of repossessions hitting the market at an all-time high, and every service provider, national forwarders, lender, repossession agencies, they're just trying to figure out how to tackle the challenges that comes with a much higher volume in this space.
Mm-hmm.
Okay. Yeah, that's actually something I wanted to touch base on because a lot of people don't get to see how many repos are out there and how big of a deal it is. And so that's why I wanted to have you guys on, because especially now with banks basically trying to panic to keep up with the repos, to keep these cars going to the auctions, what are you seeing that banks are doing, I guess, good and maybe wrong, that's something they could fix? Do you have any issues that you would think of, Alex?
I think in general, it's process automation or process improvements, really taking out the guessing game and having their teams work informed, work that they're really prioritizing what assets should be recovered first, what makes sense to go after and what doesn't make sense to go after.
Yeah, no, 100%. It's a little bit about kind of breaking old habits, because for years, every single step, every single aspect of the loss mitigation process has been done the same way. And then usually the comment is, this is how we've done it forever.
Yeah.
And with the new, a tsunami of the delinquencies hitting the market, just understanding what can be changed within your process, that you're not just throwing bodies at your problems, and you're actually creating a more efficient, is really the mindset that the industry has to change to look at things in order to be able to tackle these type of issues.
You know, you brought up an interesting thing because we make jokes and we talk about all the time on my channel how, I've never seen not million, but billion-dollar companies, banks, have such prehistoric methods when it comes to buying, collecting, repoing cars. So when I tell people, sometimes they'll repo a car, they won't know where it's at, it'll sit there for months, then move to an auction, sit there for months, and then it finally goes up for sale, and people have been waiting months for the car of their dreams to come up or that's a little bit cheaper, and they have, no idea how long it takes for these cars to go through the process. Alex, why do you think it takes so long for a bank to basically go from, thinking about repoing a car to maybe 6 months from now, the car actually hitting the auction?
It's a good question. It's I don't know if I have the 100% answer for that. My guess would be, or the assumption is that there was just never really this kind of urgency behind it. There was not the need to really service this many cars, because probably what we're seeing right now, the volume, the last time that happened was in 2008 or leading up to 2008. So really over the last 20 years, a little bit less than 20 years, there was really no reason to just be on top of everything correctly, or really on that level. And I think we also see now that loan servicing was a little bit underfunded, or was more of that stepchild in the whole booming economy, where now it's really being focused on. So everybody's trying to play catch up to an extent.
Yeah, actually, I want to ask you, Bahador, now that he actually made a great point, the fact that loan origination was the rock star, all banks cared about, let's get new loans. Now it's a complete 180. Everybody's how do we stop the bleeding? Now the focus is on collections. And what do you think about that?
Sure. No, I think first let me start by saying Alex started with the 2008, what happened in 2008 and what led into it. Around 2013, 2014, we just saw this big cloud, dark cloud taking over the industry with compliance. Compliance was the buzzword. Compliance was the number one thing that everything was driven around. And if you look at it, I hate to use the word red tapes, but compliance created that kind of a red tape around our industry, which to the question you just asked is, on the collection side, now there is 100% attention, right? But then you have this dark cloud of compliance that is still hovering over it. And the biggest challenge the lenders are facing, especially like the folks within the business aspect of the collection team, how to navigate between performing in their collections department versus still be compliant, still be fulfilling those red tapes that are in place. And that's where you're stuck with the old ways, because everything is covered under those old ways and red tapes and compliance cloud that has been put in place.
Yeah.
So that's like the biggest, probably the most important thing that people have to question as when you look at how to perform better in your collections and your loss mitigations. How can you actually evolve your compliance program and how maintain compliance, but how can you think differently about it using unprecedented approaches and things that are new?
Yeah. And I would absolutely agree with that, because like, you know, I think compliance is good. Red tape is good because like not having compliance, not having red tape, that brought us like on the housing market to 2008. But I think exactly what you touched on, there are new approaches. Like if it comes to compliance, there doesn't have to be PII involved. There can be checks being made. There can be data exchanged even between departments, or at the very least, have those departments collaborate. I think that's the major issue, because like so far it's like one sits over here, the other one sits over there. There is active accounts, there is accounts that are in default, there are charge-offs, but somehow this is not like a single line, or it's not connected. And I think that's where basically improvement can happen fairly easily.
Yeah, actually, I want to go back to that, because I don't know if people I know at home don't know this, but when you deal with a bank and their collection department, I mean, there's literally 10 people that this file gets handed off to. Maybe somebody in collection, somebody in skip tracing, then it goes to maybe somebody that deals with impound, someone deals with repo, somebody that deals with, you know, collections, I guess, in general about garnishing paychecks. So there's so many of these things. Do you feel that there's a better way to kind of push that through, or is there some sort of system that they can, I guess, kind of build to, I guess, speed up the process?
No, absolutely. I just think it's like there was no impetus to really like go after those systems. Now that they have to be serviced, I think that's where we're having, or at least we're seeing on our end, a lot of discussions where why not combine these efforts. This doesn't have like to be a 3-bucket approach. This can be a 1-bucket approach, because at the end of the day, it all goes in the same, accounting system in the back that has to be reconciled. So yeah, absolutely. I mean, I think Autosquared, Loanbridge are one of the examples where we're really trying to address that in the market, foster collaboration, and really break those like previously set dogmas of like how things should be done or have been done like always.
Yeah, actually, I'll preface you on that one, Bahador. Like, we talked quite a bit in length about how, you know, the automotive industry doesn't seem to play very nice with each other. You know, everybody thinks that they got the magic ticket. They don't want to share data. They don't want to share information. But I believe it's held back our industry, I mean, by decades. We're so far behind. When Alex comes from like, you know, a tech background and like yourself, it's like you see our industry and like people laugh and they don't think that it's that, I guess, backdated as far as tech, but it's pretty bad. What do you think about the current state of like how some of these companies refuse to work with each other and how to like to share knowledge and information?
No, that's the $1 million question. The loss mitigation industry has been obviously it's been a very competitive market, so to speak. And every single player, even within our past lives, every single player within this space has always taken this approach that be very competitive, shoot for monopolizing the market, shoot for owning that aspect of the market. And unintentionally, that kind of created this big gap, big void within any kind of operations you look at. And it's every lender that looks at this or thinks about this question, they're going to think about it, okay, how does it affect me, right? But if you actually look at it from a holistic view, handful of lenders pretty much use the same number of national forwarders within this space, and same number of national forwarders use the same, over 1,500 repossession agencies within the United States. And even though your problem is just your problem, how you attack this and look at this plays a downstream role to everybody else involved. There is now in this market, there is a challenge with people not trusting and wanting to work together. And rather than looking at the problems and how collectively, let's say how we're doing this today with Loanbridge, We identified a problem within Impound. We wanted to connect together and figure out how collectively can we fix a big problem. We first defined the problem, what that problem is, regardless of not counting each other's dollars or not figuring out how we can kind of make more money than Alex or Alex make more money than Autosquared, but really identifying what the problem is and how to solve it, and look at it from a complementary perspective, not a competitive perspective. That really is going to change our industry. And going back to the note I was trying to make earlier, is that lenders need to look at this as that they're all involved in solving the solution for the entire industry and not just individualized or unique to themselves. And that's the big mindset that has to change when we talk about process consolidation. Every single lender has various processes that, for the most part, they're all the same.
Yeah.
And I can go on and on about this, but just wanted to and we probably can revisit this, but this is one of the key things that when you talk about inefficiencies within our industry, you have to look at is, as a group, what changes can we make that would impact the entire space, not selfishly just what I can do to make it better.
Yeah, I mean, I've been doing this for over 20 something years, and it's very rarely I can get two companies like, hey, this company's complementary to you. You guys should work together. No. And then even like this podcast, like I've had probably numerous banks like, hey, let's get on. This company works very good with you. You guys might have some sort of like synergy. Nope. Like nobody wants to work together, which I thought was pretty hilarious. But the fact that we're here today kind of talking about the auto loan crisis, we both can agree that it's getting worse. Alex, on your end, coming from a tech background, and now that you've kind of seen what's currently going on, I guess, with our automotive companies, what is your current opinion of where we're at and where do you think we should be in the next maybe 3 to 5 years?
Yeah, I mean, I am a relative newcomer in this space, so there is a lot of things that baffle me on a daily basis. But I think it is the aspect where we are right now is just like not a sustainable situation. I think from a software perspective, from a process perspective, I think you, Bahador, mentioned one time that less than 5% of updates actually being read or processed, because it's just not possible. There is still a lot of stuff that is paper, which in 2024, one of those baffling things that occupy my mind every day. But I also think it's like where it should go in the next 3 to 5 years is really a customer first, product first approach to really actually have a reassessment of what is necessary. Not just say, oh, we've always been doing this way. These are, these are the processes we always had in place, but actually say, hey, talk to me, talk to us, talk to the people that want to make a change here in the industry and say, what do you actually need? Where do you think we can actually help you? And then really start catering to exactly those problems and not just pushing something out that's just well, take it or leave it. That's the price, and have fun if you find somebody else. Well, good luck finding somebody else. So it's really be obsessed with the customer and just push it forward in that regard.
Well, a follow-up question to that, what are you getting from your customers now? What do you think is their biggest needs, or what are they coming to you the most for? Is it for faster notifications? Is it for more detailed data, or is it just something with processes?
I would have to say it's there's always a new request that then results in another new request. So it's what we do is with almost near-time or real-time notification. That's great, but now how do we follow up on it? And if we get 10 new requests in, what do we follow up with first? And then also just okay, now that we have that, how do we train our personnel to follow these new potential, notifications? So it's really kind of this. Okay, I mean, the one thing I see is people are hungry. They see the value. They want to basically integrate it. They want to do it there, and that's why I think it's really prioritization and how to use the human capital that's already at the lenders, that's already at the forwarders. How can you use them most efficiently, and how do you support them to be more successful?
Okay. I'm going to probably aim the same question to you, Bahador, but I know your software is a little complicated. So if you can kind of give people a very base level of what your company does, and then same thing, what kind of questions are you getting from your clients, and what are they trying to, get the most help with?
Yeah, no, absolutely. So I'll give you a quick background on Autosquared and what we do. So Autosquared is a really auto finance loss mitigation focused cognitive automation platform. And if you, just to break it down a little bit, if you look at the entire ecosystem of loss mitigation, from the moment an account gets approved for repo until the moment it's picked up, the condition report is done, and is being transported to an auction for remarketing, there is various number of steps and touch points and processes that has to get done, all under very strict rules and regulations. There are so many different compliance requirements in place. And today, majority of it, I can confidently say that almost majority of it is done in a very super manual way. And it's obviously prone to user error and human error and so on and so forth. And that's the mission that Autosquared is trying to tackle. Is we're building the knowledge base where we're using various levels of technology like artificial intelligence and machine learning to really tackle those manual steps and bring efficiencies into those various touch points within that life cycle.
But then also you have 20 plus years of experience in the field?
Yeah. So for me, I've been in this space for about a little over 15 years, and my co-founder John Rhodes he was the original founder of MBSI. So his background goes to about probably 25, 30 years in this industry. We cut our teeth in this space. I've sat with lenders, I've sat with national forwarders, and I've gone on ride-alongs, on repo ride-alongs, and almost got shot. So I've seen
done it all.
I've done it all. I've seen it all, and there's several people in this industry that I consider family, and that's kind of like the level of personal interest I have to see the success within the loss mitigation space.
Okay, well, I have a funny question for you because. Sure. What do you think has changed? Like, how much has it changed from when you first got in till now? Because I've heard different stories. Some people say that like they thought it'd be more, but it's really just the same. And a lot of people think it's completely different. Where do you stand on that?
So when I first started, I would say there was almost 99% of the processes were manual. I would say today we're probably 80% of the processes are still manual, but I've seen significant improvements in certain areas. For example, in the past, the notification of a repo, from the moment the repo agent picks up the car, there were so many disconnected points between that process, from the repo agent to the repo agent office, from the repo agent office to the national forwarder, from national forwarder to the lender. It was a very disconnected process. Even with technology in place, still required manual touch. Where today, it's pretty much a real-time live process. The moment a repo agent puts the account as an on-hook or repossessed, immediately gets updated within the lender system of record. And that was a huge requirement and big change. This was probably beginning of 2014. CFPB had several, strict guidance on that, and it basically changed the shape of how repossession was being done during that time frame. But that's probably the biggest change I've seen. There's still several number of manual processes that still needs to be tackled.
Actually, that's a good point. I want to put a question back on to you, Alex. I know that your software does live notifications, or real-time notifications is what I should say. What are these banks doing with like notifications for like repos and impounds and stuff like that?
Yeah, great question. It's really about like trying to stay on top of it. We've heard from our customers and trial customers, it's like drinking water from a fire hose, because like that was not happening before. So really, how to stay on top of it, what to follow up on, and that actually like led us to partner up with Autosquared, since like Bahador and his co-founder having 20 years experience in the market, understanding processes behind the scenes with both lenders and forwarders and like all the different verticals. It just made sense to basically help where their strength is on the process side, our strength is on the data side, to help with exactly that flood that's coming in at current volume, and that will just go up with future volume. And yeah, we'll defer to you, Bahador, on that front.
Yeah, no, and that's a great point from Alex. But like since the beginning of our partnership, with Loanbridge and Alex, I think like so far we're monitoring a little over 1.1 million VINs within as part of our partnership through this impound process. And to Alex's point, like one of the the number one feedback we get is like there are way too many events, way too many notifications, and we don't have the infrastructure to really tackle those notifications in a most efficient way. Now, some do better, some do, a little bit less. But you can have you can have all the data in the world, but if you don't have the right processes in place, your data is useless at that point to you. And that's really the challenge we have taken on as at Autosquared, that John and I have taken on, is just to look at how can we look at these processes and actually then improve them and change them in a way that it's as efficient and automated as possible, where within seconds or minutes you have the results you need, or you have the data and in action, executable action, and actually perform something for you that has some tangible results. And I want to touch on, part of the data that we've captured over the in our last few months. Not obviously all of the users give us all the information related to the type of accounts, but with close to 300,000 accounts that we're monitoring, we know that those are charged off accounts. And as you know, and now I want to hear you guys' thoughts on this, but those 300,000 on just those alone, in the last 30 days, we've captured over 950 to close to 1,000 unique events that we know about 80 to 90% of them were not produced from any other source within this industry. So there are new events, right? Correlating the value of those 900 or 1,000 events, let's say 80% of it is new, 800 events, to dollar value. That's the question that I feel like it needs to be truly answered for people to understand the gravity of the results there.
What do you think on that one, Alex?
No,
I'll follow up.
I think that's a great point with the charge-offs, because I never mentioned them in initial onboarding calls or trial calls. Now I make it a point every time to say, please put your charge-offs on there as well. Because before it's just it's just, they're charged off. What do we care? Doesn't make sense. Maybe if it's a more expensive car, it goes off to a skip tracer. But otherwise, this is just why do we spend more, basically more good money after bad money?
Yeah.
Where we say, no, this is just part of the monitoring. Put it in. This is net new money on the balance sheet. I love when I find a charge off. That's just new money. Yeah. That's just more money for you. And we've seen just and then you see this aha moments oh yeah, that makes sense. Why not? But also, I think are you aware of what's the opportunity cost is here? Are you aware that we basically can highlight those things as well? Because a person that's as part of the loan servicing department looks at the car, there is sometimes no context really around it. What's the value? Does this make sense to be picked up? So how do you prioritize it? And I think that's also where we saw we can actually provide these insights to the managers, to the department heads, to say, look, this is what you're missing out on. This is actually what you recovered. This is what you net new recovered. And look, and this is potentially now, on your end as well, having picked up a car then 5 days earlier, this is what you saved just in impound fees.
Oh, 100%. Just to let the people know watching at home that impounds or charge-offs are basically just written off accounts that they just forgot about. They'll spend maybe 60 to 90 days sometimes collecting them. Once they can't get any movement, they just let them go. And so that's why we're addressing these things as actual free money. It's just accounts that are sitting there that are not doing anything. So it kind of blew my mind that, some of these accounts, we're talking millions of dollars and sometimes millions of vehicles across the United States. Oh, no, we couldn't get a hold of them, so we just wrote it off. And it's I know with your guys' software and some of the things you guys are doing, we can actually find those cars and bring them back. And like you said, it's almost free money where it pays for itself. I know that's leading us into a new thing where I know everybody's about loan origination. It's about getting the new loans, and that's how banks make their money. But how do you justify this when it comes to now that the collections is basically the star of the show? And I'm sure you're going to hear this because we're getting close to the third quarter. We don't have the budget or we didn't have these things planned for it. How do you combat stuff like that when banks are losing so much money that they're so afraid to try something new?
To be straightforward, it's just working with them. Just regardless if you have the budget right now or not. Charge-off's a perfect example. If we can, hopefully, you can find charge-offs for you. Maybe that can help you essentially introducing new software. But we also like to work with our customers to say, let me help you prove it out. Because one thing is if you suddenly have an uptick in recoveries, if you have an uptick in notifications that actually lead to recoveries, or then even if you're struggling with that, we can already give you an immediate help in saying well, have you thought about approaching it this way, or actually share data the other way? And then obviously as well, working with Autosquared, help on that front as well to make the introduction there.
Yeah. And I would add this too is, unfortunately, because of how short-staffed majority of our lenders are in especially in the loss mitigation department, because all the focus is on the origination, right? Because of how short-staffed they are, a lot of times they don't have the time or the bandwidth to build the ROI case for any of the solutions that can then free them up to do better within their departments, right?
Yeah.
It's the irony of it, right?
Oh, yeah.
So you don't have time to capture that ROI, and that's why, like, similar to Alex, like in all of our partnerships or conversations with our clients, helping them through that ROI analysis is the big part of our engagement. And I have to say, I'm very optimistic about where the lending community is going. I can tell you that almost 90% of the conversations I'm having, budgeting for advanced technology, including AI, automation, more better data, any kind of technology advancements, definitely is part of this year's budgeting process for 2025. And I'm very optimistic about where the lenders are going. Like almost, majority of the conversations we're having is, yeah, definitely this is part of the agenda. This is the CEO's instruction to make sure it's part of the budgeting exercise for 2025. So I think it's a gradual path that we're going to have to go through. Short term, like we just talked about, the skip accounts, charged off accounts, those are, I think, easy for any lender that if they look at their data correctly, they can justify the cost to then bring those in and enhance their solutions or their processes. Long term, it is already part of every budgeting exercise that is coming up for the next year. Yeah. So I think our industry is going to see a very significant change in how technology is adopted in this space as it relates to these types, especially the loss mitigation sector.
Yeah, and I would say on that note as well, it's like a shameless plug that's why we're also offering free trials because like I think both our companies believe in like the proof is in the pudding. Like let us help you and vice versa. So if we run this, you can basically prove out we found you charge-offs. You saw an increase in notifications that you normally would be paper based. Now it's like less effort from a human capital perspective. You actually picked up more cars, or at the very least, we can give you a number roughly associated with the opportunity cost. That makes it easier. And then actually backed by real data that's been verified internally by each lender. Mm-hmm. That's basically our approach where we say it's not just like, hey, take it or leave it. It's just we want to work with you and then also help us, like tell us what you need from us to help you.
Yeah. Well, I got kind of a hypothetical question for you guys, and I'll just kind of preface to everybody watching. I know a lot of people are wondering, like, why do you care if banks get their cars back quicker? What does that mean for me? That's just, it doesn't affect me. And it actually does. The faster they collect these cars, the less risk they have, the more they're able to adjust down your rate when it comes to you giving a loan. Better loans, better approvals, less risk. The bank's all about balancing its books, figuring out the best way it can assess risk. So all these things we're talking about actually has an ultimate effect on regular people watching this, not only the bankers that are, excited probably about your guys' software. So I want to preface it to you this way. When it comes to dealing with banks and dealing with consumers and everything else, how do you feel you see yourself in the market? Do you see yourself as something that could, I guess, be considered risk management software or something that could help their loss mitigation?
Yeah, I mean, absolutely. That's ultimately what it should be. It's just like helping with new data points, helping with data origination to feed risk models to really reduce the exposure, because similar to anything, is like credit cards charge a lot of interest rate because they need to be insured, because there is fraud on it. There is a lot of chargebacks. That all factors in. It's not just like because somebody pulled a number out of a hat. Like, and you can't just infinitely charge interest rates. There has to be a give and take. And like that was like one of the impetus of like why I launched Loanbridge, was just to help with that, to have more quantifiable data, to basically bring exactly that, make that accessible, and hopefully in the long run, yes, that it will affect interest rates positively for consumers.
What about you, Bahador?
No, I'm trying to be careful about how I answer this, because at the end of the day, for the lending community, right? Because your question was specific to the lending community. It's going to come down to the numbers. At the end of the day, looking at their balance sheet, looking at the plus signs and the negative signs, that's what's going to drive the conversation, right? But for Autosquared and for John and I, when we looked into building this company not only was how can we help our clients, obviously, to have a healthier balance sheet when it comes to their loss mitigation processes, but also how do we still satisfy that dark compliance cloud? And that is another huge factor, because at the end of the day, as that cloud is not going to go away, and that cloud is going to remain in place. It will probably be there forever, and making sure that the lenders' balance sheets and their operations and their performance is constantly improving, constantly becoming more efficient. At the same time, they're remaining compliant and they're staying outside of the problems within the red tapes. That's the ultimate goal, and that's how we coming to the table with any conversation we have with our lending partners. Is we'll make it better. You will have a better performance number-wise and as well as compliance-wise. That's is as simple as that.
Okay.
I was like maybe turn the dark cloud, to beautiful sunshine, because like now it goes hand in hand. It's like you have the right data, you have the right processes in place. Now it just goes hand in hand. You're not hampered, because I think that's what most people always see with compliance. Oh, they're holding me back. Oh, they're doing this, but they're there for a reason. I mean, we touched on 2008. Like specifically with Ninja loans and what else was out there. There is a rainbow at the end, it's like of the dark cloud, which is just like, everything can work nicely together if it's being managed correctly.
Now, I know we talked a lot about loss mitigation. What other areas are you guys helping banks with, or financial institutions?
Yeah. So obviously impound piece is one of the areas we're working with Alex, but our goal or focus, like I said, is like throughout the entire ecosystem of loss mitigation, from the moment it gets approved for repo until remarketing side, right? So our cognitive automation platform is heavily focused on areas like skip tracing, being able to automate that process, utilize all the publicly available data, and utilize the performance of those accounts after the initial assignment, and then find correlations and patterns to improve the skip tracing process. So another part of that is updates, which is a huge problem within our space. On a daily basis, over 500,000 updates get created in our space. Probably less than 5% of those are getting read today, but majority of them get buried into this queue. And when you have valuable information within those updates, these communications between the repo agents and national forwarders and lenders, important information gets buried.
Yeah, you should put a dollar number on every single message that gets ignored.
Yeah, exactly that. Like those are, and it goes beyond the dollar value, monetary value of this as well. And I use one example, and this is an actual event. Like there are certain scenarios where key information could, the repossession space is somewhat a dangerous space for the repo agents who are running these assignments down in the field. There has been actual scenarios, without me going into the details, where if somebody would have read those updates at a real-time basis, somebody's life could have been saved. And this is one of the missions like I took on personally, like when we started this mission, this entity with Autosquared with John, is how can we look at 100% of the updates, utilize existing technology, machine learning, various large language models, and how can we actually train it for the loss mitigation space, understand the context of every single update, and drive executable actions from those updates. And we have done a significant job on that. We've reviewed over 140,000 updates so far since the start of our company, and we've made significant progress on it. And then last piece that I want to touch on, similar process when it comes to pictures and documents. Significant list of requirements, checks and balances when it comes to what constitutes an assignment to be a compliant assignment, right? Major part of it is, have we uploaded all the necessary documents and are they filled out properly? Have we filled out all the necessary pictures and are they taken properly? Having an automated process where it can review 100% of those uploaded documents and images and properly actually go through the checks and balances is another major focus for Autosquared. And again, we've done a significant progress on that.
Bahador mentioned is, we also trying to like always figure out or expand our data coverage that helps with exactly those use cases, like lien monitoring, like really preventative fraud detection or risk detection, and saying like decoding VIN, seeing this as a synthetic VIN or not, So it's like this continuous effort of like working with our customers and working with industry partners to really identify what is helpful. And maybe the data is already there. It just needs to be highlighted.
So I know that a lot of people are complaining about all the notifications they're getting. What are you guys doing to help counteract that and help, I guess, banks figure that out?
Yeah, no,
process-wise?
and that's the piece like we just talked about a little bit earlier. Like you can have all the data in the world, but if you don't have the right processes in place, you're not really going to be able to take advantage of it. So one of the things that we're doing at Autosquared is we have now developed the process for all the state required forms, the repossession of affidavit forms. Like for example, Texas has 3 different forms: VSS 12, VSS 13, and then the affidavit of repossession, as well as custom forms for each of the lenders, like the hold harmless, the authorization of repossession. Every time Alex produces an impound event, regardless of where in the United States those events are, our system automatically produces every single required document, pre-populates those, produces them, and makes it available to the lender. And not only makes them available to the lender, but at the same time initiates the workflow processes within their internal system, assign it to the right department, to the right person with the right flag and urgencies. That's how you can actually move things along rather than all the notices sitting in an inbox, waiting for somebody to get a chance to look at them and do something about it.
Okay. I got, I know we're coming up on our time, but I got one last question for you guys. It's very important. And then afterwards, we'll follow up with outros for each of you guys. Where do you see the market going in the next 2 years?
I'll let you answer first.
I can tell you one thing for sure. It will not be the way it is today. It can't be. It's not sustainable. There is no way that this industry will survive if status quo continues. That I can tell you for sure. I'm like I said earlier, I'm very optimistic about the fact that our lending community, our national forwarders, even repossession agents, I've seen certain things from several of my friends that they're actually heavily focused on technology advancements, looking at current old habits and how to change that and make that better. So it's a movement across the entire industry, and I'm very excited to be part of that.
Well, one thing before you get off on that is like you talked about like the status quo, like currently what's going on, because people don't believe me when they say like banks are losing money. They're losing a lot of money. And people say, no, banks don't lose money. They never lose money. Can you kind of hint on that, the fact that like there is really that many repos, there is that many deficiencies, there are that many charge-offs?
I mean,
because I say it and people are like, oh, it's just a YouTuber, but you guys are actually, you work with banks every single day.
I think if I'm not mistaken, 2024 is estimated to have close to like, I think 2.7 million repossessions in the United States.
Yeah.
And this is, again, based on just numbers off the top of my head. But if you look at, if a car gets repossessed and goes to the auction, on average, now exclude the part where during COVID, where used vehicles were like worth 4 times their actual value. But like in a normal stance, like what we're today, every time that car goes to the auction, that a lender loses about 40-50% of their initial value. Like it's about, at the very least, about 40-50% loss. So multiply that by 2.6, 2.9 million repossessions. This is a significant problem. It's a significant challenge that everybody's facing, and the only way you can change certain things, that you can't change consumer behavior, but the only thing you can really change is cost, operational overheads, expenses, efficiencies. Those are the things that can move the needle for you in that process.
Okay. Back to you, Alex.
Yeah, I think it's the next 2 years. I agree. It's not going to look anything that it does today, for sure. I mean, we're basically dealing with like any other market. I think, like especially housing, with the repercussions of COVID. I mentioned it to a couple of friends. Like basically, the earthquake hit already, and we're just waiting. Like the earthquake happened, and we're just waiting for the tsunami to hit. So we had like all the loans, little exuberant, during 21, like 2021, 22. That's what we're dealing with right now. We see record credit card debt that gives you probably a foreshadowing of what default's going to look like in the next 2 years. And everything will point towards technology. Like how one can this be mitigated in the next year and a half, and then beyond that, then to just like really swap it around and see how can this help with origination in the future. How does this influence the risk models and so on? So I think that's going to be the drastic change. It's like a more sophisticated usage of the data because like, there's going to be new data that can be used that wasn't available before.
I want to thank my two guests for taking the time to actually talk about the auto loan crisis. How can they find you, and where can they look up your company?
You can find us online under Loanbridge.AI. Also, feel free to contact me directly with Alex at Loanbridge.AI. Also, just wanted to say, it's like we touched a lot on lenders, like bigger companies, bigger processes, but also it's like we're working with buy here, pay here dealers, which lenders in themselves, recovery specialists, dealerships. So we have completely finished baked products and web UIs that can be used even on a daily basis. It doesn't have to be. You don't have to be like a large lender to utilize us. Awesome.
And Bahador, how can they find you and your company?
Absolutely. So online, we're at Autosquared.AI. That's our website. Obviously on LinkedIn, Bahador Rahimi, you guys can easily find me. And then my email address is bahador@autosquared.ai. I copied Alex's format before we created our email. So
nice.
Thank you again for the time, and I've very enjoyed this conversation.
Oh, no problem. And then I'll leave a link in the description for all their contact info if you guys want to reach out to them. See you next video.